Kush, now I'll drive your attention to a sector or a space which has astounded almost everybody. That's the new age technology space. Now, we were looking at the returns on the stocks. 5 out of 6 stocks that we have on our list today had showed negative performance in the last fiscal, and all of them are in the positive. The most glaring example is Zomato, which has experienced gains this year to date of 137.84%, and it is now in profits as well. All of these stocks basically displayed robust sales growth in contrast to the previous year. The latest entrance, of course, to the pack is Honasa Consumer or Mama Earth, and the stock is up 4.1% today. I'll just take a few names. Car Trade was down in the negative 33% last year. It is up 87.07% year to date. Nykaa was minus 56, is up 20. Paytm was minus 21, is up 38. Policy Bazaar minus 8 is up 11.83. Paytm was the only one that was in the positive last year also, but it's much more. Startups basically have been subject to a lot of criticisms that they look at their valuations and they don't look at their bottom lines and unit economics. But that seems to be changing. Do you think it is time that investors start looking at these new age tech stocks more seriously? And would you recommend any?
Sure. So let's understand why this happened, right? I mean, if you're sticking to the cricket parlance, see, it's one thing when you play in the domestic league, but when you come to the international arena, the game's very different. It was a different story when they were playing the growth, the growth story or the growth card, when the Ps were investing and they weren't listed. But once you get listed into the markets and, you still believe that, everyone's going to buy into that, growth story when you keep burning cash. I don't think, market is going to do that. And that's exactly what we saw when some of these names listed and, the performance after the listing. That could have been a story that played out well with the PEs, not with the, investors in the equity market. And the kind of shift that we saw in the businesses in some of these names is what is driving, the growth that you just mentioned. Also, let's not forget the fact that, Paytm, Policy Bazaar, Zomato in particular had actually fallen quite a lot from their, listing prices or their issue prices. And hence, there was some value which was already there on the table, after those falls. So I do see a lot of these names, doing well going forward as well. And our top picks right now are Zomato and Paytm, purely from the fact that, the business shift is there and the performance is also reflected in the price. It could be that the stocks might see a bit of a dip, and only because of technical reasons that they've rallied quite a lot, and again they've come to a price where at least Zomato 120 to 130 was the zone where a lot of buying had happened. So you could see some selling pressure coming around this time around, and people want to exit who've been holding on for a very long time. But other than that, once this dip settles in or once these key levels are taken out, I think Zomato would continue to rise from here. Paytm also. Let's look at the stickiness, right? I mean, these businesses have a very obvious and very apparent usage. I mean, you and I use a lot of these businesses, so that's not going away anytime soon. And from the price point also, as I said, that corrected a lot and we're seeing an up move from here on. So Zomato and Paytm, these remain our top 2 picks. Policy Bazaar, maybe, I don't see a bit of, a big movement here. Nykaa, not, not on our radar for now. So as I said, Zomato and Paytm, these two would be our top picks. And we do see these stocks performing well going forward.